All right, we are now streaming our crypto market update. Let's just change the title. And if you're watching this as a recording, we do provide a more professionally done, I guess, not live version every day, which is not labeled the live. It's just labeled whatever title it is. For the day, we have one crypto market update and one global macro update. Hello, Watson. How's it going? We are doing our crypto market update. Just waiting a few more moments, and then we'll get started with our recorder. And then do the daily video. All right. No, I do not want to update right now. All right. Let's get this going. Let's record this. Hey traders, welcome to another crypto market update. In this video, we're going to be talking about some important news discussions within the cryptocurrency space, and then we'll dive right into the charts. So without further ado, let's go right into our first topic. So a lot of people have been talking about this. I still will go over it, but I'm sure if you are plugged into the cryptoverse, you will have already read this or heard about this. Central banks recommend to ban stablecoins. What are stablecoins? I'm sure you heard of them. Tether is the most well known, and what some people might not know is they're actually I guess arguably the most successful type of cryptocurrency yet, because they have the most traded volume. There's more people that use Tether to trade than any other coin, and it's a really vital part of being able to really profitably trade within the cryptocurrency space. Yes, you could go on BitMEX and -1 or +1 short, which is you're basically going into USD, but obviously with a short position on, you are racking up a slow fee there. So stable coins do actually provide a huge benefit for individuals trading in the crypto market. The Financial Stability Board outlined 10 recommendations to central banks for regulating stablecoins, including outright prohibition. The FSB is an international entity that provides suggestions on the global financial system. It comprises of central banks and finance ministers from the major G20 economies. The recommendations are to be presented before an audience of G20 countries and reference major stablecoins, including USDT, USDC, TUSD, PAX, and DAI. Given the market's heavy reliance on stablecoins, a ban could mean disaster for Bitcoin and a broader current cryptocurrency market. To some degree, I do think that is true if for example, a country does ban all stablecoins use within their country. That's pretty devastating for sure. But then also on the flip side, if individuals do want to stay within the cryptocurrency space, this could drive basically all the value within these stablecoins into BTC and other alts, which if you're looking at it from that perspective is actually extremely bullish, because it's kind of forcing people to either go into true just fiat currency, which I think people who are in the cryptocurrency space would not want, and then this might force a huge surge in demand for BTC, Ethereum, other major alts. And then we can see right here, this is the actual report from the Financial Stability Board. And just something to note here, they actually talk about it in a positive note. They have potential to bring efficiencies to payments, including cross-border payments, and to promote financial inclusion. If widely adopted, however, a stablecoin could become systemically important in and across one or many jurisdictions, including as a payment infrastructure. Ensuring the appropriate regulatory approaches within jurisdictions and internationally will therefore be important. So they say that it will be very, very positive, right? It will promote financial inclusion. This is really great to hear. If you are living in a country that doesn't have a financial system, that's great. But what comes with being able to print unlimited amounts of money and having the powers of a central bank, you get basically unlimited power. If you can print value, that's what they're doing, you have unlimited power. And when you have basically the tap of the monetary policy of the printing press, you can take out as much money, you can dump as much money into the pot of money and circulation supply. That's going to bring a ton of power, and obviously no one in power wants to lose that power, so they're going to fight in tooth and nail to try to maintain that structure. And we can see right here Tether, as we can see at the very top, for the highest 24-hour volume at 41 million or 41 billion, and then BTC at 33 there. And then we can see just down here, we see Paxos USDC or USD coin, which is USDC. So a lot of these stable coins are actually being very successful in what they're supposed to do, which is obviously not great for these projects if these central banks and if the FSB actually tries to go through and completely ban all these tokens. We'll see how it goes. Next thing on the list, we already talked about tokenization. There's actually a real estate fund who is actually tokenizing their real estate. We can see Germany's Black Manta Capital Partners launched a security token offering, or STO, for Berlin's real estate worth more than $12 million. Let's jump into this more. I'm just going to get a little bit of coffee and then we'll continue. All right, so this includes around 2,000 square feet of real estate in total, mostly comprised of individual apartments from 40 to 60 square meters in size. Construction is expected to be complete by 2022, and units will be sold to investors and owner-occupiers. So yeah, it's great to see that they're actually implementing tokenization into real estate, and there's actually information that tells us that this is going to grow as time goes on. Token holders will share 20% of the sale of profits through securitized participation rights. The company said the tokens will enable ordinary investors to participate in a profitable real estate project normally reserved for professional investors, and you can start really with just $550, which is really not much to invest in real estate. And then we can see why this is beneficial. Lower transactions cost, transferability, tradability. You can invest in real estate today without going to a notary, which is great to hear. This is making it more less friction, more frictionless, which is obviously way better for the little guy who is having trouble getting into these different asset classes. And then we can see there's actually more and more people actually getting into this. Looking into the future, Platzer expects a new tokenization service industry to emerge and the crypto custodian market to grow. Blockchain technology is gaining steam in the real estate market, with real estate security tokens now representing half of activity security token markets and 15% of the volume, of total volume. In March, a Japanese firm partnered with a tokenization company to create funding platform using digital securities to invest in real estate. So things are actually coming into fruition. We've talked about tokenization and the possibility of it, but now there's actual companies who are going and actually tokenizing real estate and different assets and selling them, creating an easier way to trade, transfer, and have less fees when they're actually transacting. And you don't have to go to a notary, which is great to hear. So positive news in the cryptocurrency space in that regard. And also, just to finally touch it off here, we did talk about China's central bank digital currency as well. And they are possibly actually already making an app. And we have a photo here. It's not validated, so we don't exactly know. It did come from Binance, and let's talk about it here. This is a screenshot of a purported pilot version of the wallet app for China's forthcoming digital yuan, are circulating on social media. So we don't know if it's the actual thing. It's just circulating on social media. Take it with a grain of salt. But Ling Zhang, executive director of mergers and acquisitions, Global Fiat, at cryptocurrency exchange Binance, first shared the image on April 14th, later retweeted by CZ, the CEO of Binance. Gonna get a little coffee, and then we'll continue on here. All right, according to Li Zhang, the app is available for download in 4 cities for the initial trial. I'm going to botch this. Shenzhen, Chenzhou, Shuhu, and Chongzheng. I don't know if I said that right. But anyways, she highlighted the inclusion of Chongzheng, new metropolis located on the outskirts of Beijing, which has been the site of a dubbed Smart City Brain project. And this city, Chongzheng, new area will have an enhanced intelligent infrastructure that spans satellite information services, sensor recognition, a 5G network, supercomputing, and big data facilities. And there's already big tech giants like Tencent, Alibaba, JD.com, and Baidu already coming and attracted to this location. And we can see China is definitely ahead of the game. As recently reported, China appears to have been accelerating the development of the digital yuan, notwithstanding the COVID-19 crisis. On March 14th, the Bank of China was alleged to have completed the development of currency's basic functions and have already moved on to drafting laws for its implementation. So we talked about the Fed potentially creating a Fed coin or something along the lines of that, and we see other individuals within the policy and the structure bash it and say that's a really bad idea, but China just is really going full steam ahead, it seems like. Obviously, we will keep everyone updated, but for the short term, it does seem like China is really, really trying to get ahead and become the leaders of this new digital age. All right. That is going to be the news section of the crypto market update. We'll now get into the charts here. Just a quick explanation. If you do have any questions regarding what we just talked about, or any of the questions that you'll probably or maybe have while we go over our crypto market update on the charts, definitely don't be afraid to ask. We will be answering all questions for those who are looking to know more. All right, now, as we can see, we're going into the charts here. First thing we're going to look at, like always, is going to be Bitcoin, and then we'll move on to the other alts here. All right, first thing is first, like always, let's go on the larger time frames. I did take out some of the stuff because my Brave browser closed, so then I have to reopen everything. But we can see right here, let's get our snip. This, in my opinion, on the daily chart looks like a massive squeeze, which, in my opinion, inevitably will turn to a huge bull run. But right now, we see a high, lower high, lower high, lower high, lower high, all getting pretty well respected of this major descending trend line. This is going to create, you could say, the wedge of the major structural pattern that we're seeing right now. The major level of support that we currently see, in my view, is going to be right around here, right? The 48.5K zone. But before that, we obviously need to break, and we have this nice ascending trend line that connects the higher lows right here, and we currently have a horizontal level of support at around $6,700, somewhere around there, and we're currently holding above that, and we'll talk about in greater detail how this structure looks very similar to this structure, and we already talked about it before, but when we do get into the 4-hour time frame, it will become pretty clear as to how these two structures look very, very similar in just how the weakness comes into the market and how the strength from the bears starts to emerge. Pretty interesting to see. But overall, on the daily chart, this is what I see. Is I see a descending trend line, and I do see a descending support. I do see a minor level somewhere around here, but I am looking at this market as a descending wedge, and I do think that we will have one more move to the downside here, retesting that support. It's just a matter of if we're going to hold or not. My view looking at the weekly is we will. Just because we have this major symmetrical triangle formation that we're currently holding with the anchor point at around 1800 back in July of 2017. And then we have our second major touch point back in the consolidation volume accumulation phase of 2018-2019. And then we had a type B close where just the candles closed and then the wick was protruding below the zone back when we had that 50% dump in March. So we can see pretty well respected ascending zone, and how we're looking at it from the daily is the price is going to probably push back down and test these lows, and if If it does hold, that's great. If it does break through, we will have to adjust our weekly time frame outlook. We do have a horizontal zone sitting at around 42, 43, somewhere around there, previous level of resistance. So we will probably look for that zone to be used as a support yet again. But at the end of the day, that's going to be the meat of the move for this particular trade in my personal view, is from kind of where we currently are right now all the way to where the lows are, where we have the two descending supports kind of come in confluence, where we're going to have lots of demand there. And that's going to be the trade that we're looking at for the next major move. Now, keep in mind, if we do get another major capitulation situation like this, yes, you will have probably a wick that comes to the downside. Yes, you could probably capture it, but our goal is to capture the meat of the move. And in my opinion, the move from where we currently are to back down to around the previous support would not be a too bad of a trade here. That would be a pretty high probability situation that we could be looking at, because after this low set in, BTC usually has some sort of consolidation. Bitcoin doesn't usually have a V-shaped recovery. It usually consolidates, creates a base, has some volume accumulation occur, and then you are able to see that price appreciation. And we can actually talk about it right now. We can see right here on the daily, we see a huge dump down, and then you see a recovery that has a ascending trend line hold right here. And that's currently what we're trading, is we see a squeeze, we see an ascending wedge form, and now we got a break, and now we're consolidating, and I think we're going to be bearish. But let's look at the previous major market dumps. Well, the most significant major market dump we had for a while was this one here, all the way from basically plus 10K of the wick, let's say 96, all the way to 69, 68, right? Huge move down. Now what we saw is we saw a base, right? So we saw the low form right here, and we tested this low not once, not twice, but 3 times before we got a reverse head and shoulders pattern and move to the upside. Now, if we are looking at just this move and looking at where we currently are right now, it's not hard to assume that our move was this right here, this little ascending wedge, right? It's not hard to assume. So we can see that, yes, it might not go down immediately to the low, but there's a high probability of the price actually making it there. And we do have to have patience. We can see there's wicks that could come up. We don't know how it's going to get from point A to point B. We really do not. We don't have a crystal ball. But we are creating a situation where the probabilities are in our favor due to having an edge in the market. And right now, in my personal view, we have an edge in the market because we backtested it over and over, and the base still needs to form. Let's go on to another major market breakdown, which was right here, the break of the 90, let's say 96, 97, $100 support, if we just draw in it right here, and then we saw the base form. Yet again, what did we see? Massive sell side move, and then we saw the support hold, right? 1, 2, 3. Right here, and then it dumped down, and obviously we got a massive rally back up when it did break back above the previous support, new level of resistance. But we can see that it's consolidating after the massive dump down. Let's go even further back here. A very, very notable bear market correction was this one from 6K, that massive 6K dump with this nice little ascending zone. What did we get, right? So initially, let's just talk about it right here. We got a massive move to the downside. We got a tight little consolidation, a little squeeze, and then another massive move to the downside. We got a little correction here, a little correction here. We can see, in my view, I think we're still kind of in this zone where we're correcting, and we're going to get another spill to the downside. That's why I'm short bias. But in order for the buyers to start gaining confidence after such a strong move, we don't really see that many V-shaped recoveries. We're trending, we get a massive sell-off, and then we get a huge rally to come back up unless we're in a huge bull market, right? If we're looking at late 2016, in 2017, especially later 2017, everything's going to bounce because it's on total parabolic, which is a very different market to what we're currently in right now. So what market you're in matters. But looking at what we just had a significant dump, so we're comparing it to previous significant dumps we saw in the past. And we can see right here, huge dump, we got an ascending zone. Obviously that's not a perfect trend line. If we are able to connect those lows right here, we got a nice ascending trend line, and then we get another dump down. We can even have another ascending trend line right here, like so, and you even get a squeeze like this. You can just put a horizontal zone, but you're again getting another spill. I know it's very, very long, it's consolidating, but you're getting these pushes to the downside until you get a low to form, right? Where you get a low, lower low, lower low, a higher low, you create a trend line, low, low, but then you start to get these less lower lows, and then you form some level of a base. And then you can draw in your descending trend line. You're going to get a squeeze. If it pushes to the upside, well, then you have a possible bullish move on your hands, or just a short squeeze, or just an impulse move for a correction. But those are the types of things you're looking for weakness to the downside. And we're not seeing that yet. We saw a huge move down, a massive rally back up, and we're not really seeing any consolidation form at all. So what I'm looking for is another consolidation to form. And that's basically what we're looking for. And until that happens, I am looking for a good short that we're going to have on our hands in my personal view. So got a couple options. I don't exactly know where the take profit is. I'm definitely going to be looking at the 48 zone right around here. But if we do get another dump down and then we get some consolidation at this zone, that for me would be a pretty good opportunity to be looking for a potential long. But, you know, at these highs here, I think it's way, I can't say overvalued, but the highest probability situation, in my opinion, would be to make that second low or even a third low so we can validate this zone as a strong level of support. Don't really have any other dumps to the downside. I guess we can talk about 2018 here. We can see, let's just draw it in. When you're moving to the downside, so you're saying, wow, this is a V-shaped recovery right here. Well, yes, it technically is, but what did we get? We saw one test, and then we saw another test validating the zone. You could draw a trend line here, horizontal zone here, break, retest of the previous support, new level of resistance. All this is fair game for a short. So yes, it did have a V-shaped recovery there, and if you're looking at the current price action, it does look like a V-shaped recovery, but this is kind of what we're expecting is a retest of the low, and if we get a consolidation like we do right here with our second touch, just drawing a descending trend line, we get a squeeze, and if we're able to get a push up and break a market structure high, that could mean a good opportunity for a long. But as of right now, we just moved to the downside, we pulled back up, we drew in our ascending trend line, and it looks like we could be coming back down, in my personal view. Everyone has their own opinion, but that's just how I am looking at the market. We can see pretty similar, huge V shape, and then it does correct back down. Let's go to the current price action. Huge correction, massive move down, huge correction, and I think we're going to get a move back down to at least test this nice low there. So that's how I'm going to be playing the markets. Let's look at the 4 hour here. This is what I'm going to be comparing the current price action to. We saw that back in February 5th to February 25th. And this is the current price action. I'm going to get a little bit of coffee and then we'll continue on. All right. So how am I looking at the markets? Now we do have to understand and have perspective of the daily time frame, because remember, we're looking for that after the huge move down, a pullback, and then a test of these lows. So that is going to be the bias of our trade. Knowing that, we're looking for weakness at the highs here of a major level of resistance. So we see initially an ascending zone that got broken. That is our first sign of weakness. We see a series of lower highs, another sign of weakness. We actually even see lower lows where we see a low, lower low, a lower low and then you see these lower highs. So we're now in a short-term bearish market structure, creating a series of lower lows and lower highs. This is, in my opinion, pretty bearish, accompanied by, just looking at the volume, lots of sell volume, very little buy volume, which in terms of VSA is volume distribution. So in a market structure, you have markups phases, markdown phases, distribution phases, and accumulation phases. This, in my opinion, is a distribution phase. So we're going to have our markdown phase going to be testing the 48 to 5K zone. And that's how I'm viewing the market. And we can see that this type of structure did appear before, and we can look back at that time frame from February, or basically all of February, and look, let's just zoom out here a little bit. Look how similar they are. Just zoom that out a little bit. And then take our snip. So our first area is in February, and our current area is obviously the present day. We see an uptrend from the 7,700, which was a very strong move, and then we saw a consolidation, right, where we were not able to see a higher high and we're not able to see a lower low, so it's going sideways. We see that on both structures of the market, and then we see a series of lower highs, high, lower high, which is creating a descending triangle pattern, which you have a descending trend line connecting the lower highs and a horizontal support zone. This is more bearish because the sell pressure is able to create more pressure each time the price tries to push up, because it's able to drive the price further and further into the ground, lower than before. So that's bearish. And then you're going to get some squeeze where you have a descending zone and a horizontal zone, and the price is going to bounce until you have the price hit the apex, which is basically where the two lines intersect, and the price has to make a decision either to move to the upside or downside. In February, we made a choice to move to the downside with a major bearish engulfing candle to start the momentum to the downside, and we did get a retest, not exactly to the new resistance, which is a previous support, but it was pretty close. You could draw a nice squeeze in there as well before the move to the downside. So that's kind of how I'm going to view the market as well with the current price action. Is basically I'm going to be looking at the same thing to happen. I already have a short on, so there's nothing really to do other than to wait until the push to the downside, breaking the $6,800 zone, giving me more confirmation so I could possibly enter more and gain more exposure to the short side. But until that happens, I don't have full confirmation because this descending triangle has not yet broken to the downside. Once it does break to the downside and we create that lower low, we can then look for that lower high structure, lower low, lower high, before the next impulse move to the downside. And for that, you'd be looking for bearish channels, wedges, descending, ascending triangles. Usually it'd be nice to have some ascending trend line that's connecting the higher lows, so when it does break, you have a pretty good opportunity to get an edge in the market, but it sometimes won't happen. That's just, you got to deal with it. But ideally, something like this would be a good opportunity where you're going to get a wedge or a channel. Would be a good continuation for that lower high formation to get more shorts in the market. But at this point in time, I'm pretty happy with my short that I have right now, and the overall market structure is in my favor. So let's continue on to the 1 hour and discuss it in a little greater detail, and then we'll go over the alts here. So like I said before, anchor point 1, 2, 3, 4, 5, 6. Lots of rejections at this zone, so we know that there's a series of lower highs that's well respected, with a massive rejection right here, giving me the completion of the head and shoulders pattern. All right, so that, in my opinion, was the completion of the head and shoulders pattern, and all we need to see is a break of the $6,800 zone to confirm that we have actually broken this price action pattern. So right now we're above the, let's say, $6,700 support, $6,700 support, and we could form another high, totally possible. We do have a zone of confluence right here with the descending zone. So then if the price does come up here, you could see another high test, maybe 69.50 yet again. I would not be too worried about that. I will still be in my trade. I'm still going to give that price room to breathe, because if it does come all the way up here, I still have this zone, and then it could kind of be like a mini head and shoulders, I guess. like so. We have a head here, you have the left shoulder, you have the right shoulder, and as long as it sticks below the 69.50 zone, I'm very happy with holding on to my short opportunity. But right now, we're just in a consolidation with a descending zone, slowly adding pressure to the market, which is driving the price lower and lower. But this is the 4-hour and the 1-hour time frame, so it will take time. We could get some just more consolidation here for a little while. We don't exactly know, and we're happy to sit through it because, you know, at the end of the day, we're looking at the 4-hour, which is a long time frame, and we don't need to make any sudden shifts. We have a bias. We have reasons why, both fundamentally and technically, and we're going to stick with our plan. So that is basically the BTC market update. Hopefully you enjoyed it. Let's just, actually, we don't have to do that. I was going to look at the BTC longs and shorts, but I don't have that set up yet, so it's okay. Probably not too important, honestly. So the next thing we're going to look at is the alts. So let's gonna get a little bit of coffee, and then we'll jump right into the alts here. We also did enter on Ethereum yesterday. All right. So our trade on Ethereum. What was it? Why did we enter? Basically, this is what we saw right here. Let's take this out just for now, like that. So what did we see? Let's zoom out a little bit to understand why we entered in the first place, right at that zone. Let's get our snip. So first off, it was a major zone of confluence. We see an anchor point right here. You see 1, 2, 3 touches, 4 touches, 5 touches. This trend line is well respected all throughout the chart. And then what you see is it breaks down below the zone with a lot of aggression. You see 2 very bearish candles, 1 and then 2, which in my opinion shows a lot of strength from the sellers. And then I'm thinking, okay, that's good that it broke the zone. We see that BTC also broke the zone, but I'm going to be patient. I want to enter on the lower high, right? So we see a high, lower high, lower high. So I wanted to wait until we see that lower high come in, and I want to see weakness on the lower high. So that's exactly what we waited for. After the move down, I started seeing this ascending zone that was holding the price in a very tight wedge where you have an ascending zone and you have a more ascending zone. Actually, that's probably a really poorly drawn one. Let's just do that again. You have an ascending zone and you have a more ascending zone like this. And this is a major zone, so it's holding this as a support, it's holding this as a support, and it breaks, and now it's holding as a resistance, squeezing up, 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 and usually you're going to get a dump down after you have the break of this ascending zone, because it's a resistance and ascending zone squeezing the price up. It's just that last little squeeze before the major dump down, and that's how I was viewing the market. And I was waiting on the 1-hour chart to get a nice confirmation for me to enter. And zooming on the 4-hour, we can see that zone pretty well respected, and then we got our dump down. So it's looking pretty good. We got the 4-hour to close, and it does look like that is the high. We have a lot of rejections on the 4-hour at around the 161 and a half range, where we see wicks all around that zone with rejections, and then now you're seeing increasing sell pressure coming into the market. So it is looking pretty good for Ethereum. We don't mind holding for a little bit more if it does create the lower high. I'm very comfortable with it, but we can see right here. Let's just take another picture. This was actually a bit of a fake out where you see the ascending zone break right here, and it came right back up, and I actually entered on that break right before. I entered like right here. Let's just go and take this off right there. So I entered right there. So then it dumped down. It came right back up. It tested the highs again. Double top. Pretty happy it didn't wick me out. I did put it a little bit higher for my stop loss, but at the end of the day, I didn't want to just let it run if it was going to break this descending zone. It held. Pretty good to see. And then now we're in a pretty good situation here. Let's talk about the current market structure and kind of how we're playing this. Very simply, we're going to hold this zone until we start to see the price try to attempt to break the 150-ish zone, I'm going to give that price quite a bit of room because it could play within this zone for a while, because the major catalyst for the final capitulation, in my personal view, for BTC is going to be the halving, which is 14th of May, somewhere around there. So we got basically a month a month here that we have until that occurs. So we could get quite a bit of consolidation, and that's not necessarily a bad thing as long as we have enough room on our stop losses. Or if the price does consolidate lower down, that's fantastic. We're just going to be sitting, right? We don't need to be trading every single day. Well, at least I don't. And I'm just trying to capture the major market moves. So right now, this is how I'm viewing the market right now. I do have a short position on BTC and Ethereum. And, you know, I might give that price a little bit of room if it does want to move up. But this descending zone is pretty well respected. I am pretty confident in the direction of more like this month in terms of April and May. I think that the BTC halving will have a negative impact on the price on the very short term, but on the long term, it will have an extremely positive impact. Also, my phone's dying. I'm just going to charge it here very quickly so that the TikTok people will be able to continue watching. Let's just try to get it plugged in here. Give me one moment. Okay, I'm just going to hold this. There we go. All right. Back in action. I'll probably cut that out from the recording. All right, so let's continue on with another pair. We've already went over Ethereum, kind of 4 hour, 1 hour, don't really need to go too far into it. And we've already discussed the larger time frame on BTC, which is going to be the major asset that we're going to be looking at within the cryptocurrency market. Next is going to be XRP. All right. In my view, XRP definitely looks pretty weak. Very similar structure to Ethereum, except we are forming a little bit more clear of a wedge. But, you know, at the end of the day, we can see that there's definitely weakness from the buyers. We had an ascending wedge right here. We did have a blow off top, which created the high right here, which actually broke both resistances horizontally and ascending. So we got a blow off top, breaking the wedge to the upside, and then we got a massive sell-off, very aggressive, to break below both zones of confluence, both supports, and then we got a retest, a nice little ascending channel, a bear flag, and then we got a major market move to the downside, and now it looks like we're getting another major market move to the downside here. So let's talk about it on the 1 hour, but on the 4 hour, it looks super bearish, very, very simple to understand in terms of the flow of the market, in my personal opinion, and I think we can see that dump down here. So let's look at the 1 hour time frame, kind of to understand the more granular details of what happens. So we see that ascending zones are breaking all around. You see the major zone right here get broken, this one get broken, this one get broken, and then another one right here that got broken. So you see these descending zones get broken each time, and you're seeing a series of lower highs. So in my personal view, this is a super bearish market structure that we're currently seeing, and as long as we're sticking below this zone, it's definitely looking like it will dump to the downside. Obviously, you have to have a solid trade plan to actually enter this market, but in my personal view, I would not be looking for any longs unless we actually break not only the descending zone, but also the market structure previous level of support, new level of resistance. But right now, like I said before, we already have shorts in the market. We're already exposed to the downside. I don't really want to put a hedge on because I don't really feel the need that there's going to be any movement to the upside that I need to be worried about. And if there is, there are some options. Too long, XRP has a nice descending trend line that could be used as a nice level of a possible entry. If, let's say, theoretically, we do see a lot of bullish pressure coming into the market, this descending trend line and this horizontal zone of support will create our descending triangle pattern, which if it does break the resistance and forms a previous resistance into a new support in a confluent zone right around here, could be a good opportunity for a hedge if I do feel a little bit worried about my shorts. But as long as it's following my structure, I'm very happy to just sit and wait and continue to sit on my hands, because I've made my bet, I've made my decision, and I'm gonna stick with it. I don't have a hard head, but and when I have a bias, I try to stick to it, especially if I'm in a trade. There's a lot of noise, there's a lot of FUD, uncertainty, optimism. There's a lot of emotions occurring in the markets right now because it's a very volatile time in basically all asset classes. So in my opinion, it's just best to have your own opinions, think logically, try to be unbiased, and look at the numbers and the chart through a lens of both long and short opportunities. And that's basically the best thing that you can do. All right, Link is going to be the next pair that we're going to look at. I'm going to get a little bit of coffee and then we'll continue on here. All right, so first things first, definitely with looking at Bitcoin, obviously we're looking at a little bit more short bias, and this is a great retest zone. We see a nice double top here, and this is a retest of the low of the double top. So very simply, it's a good resistance area to look for shorts. Let's look at the 4-hour time frame here to look for another opportunities. 2 trend lines I can draw. This first one right here, which is the highest confirmation to potentially test the low of around $1.56. This is going to be a major zone for Link. Why is that? Let's look at the weekly. We see major areas where there's going to be support. We can see back in September 2019, December 2019, and March of 2020, and May of 2019. It was a key level of both resistance as well as major zone of demand. So if we are going to be looking for any entries above $3.30, or sorry, above like $3, that would probably be a really good area to take profit. If it's $3 to $1.50, 50% market cap decimation, which you can't really be complaining about in a short, but that's just obviously me. Everyone has their own risk reward parameters. So looking at the smaller time frame of this potential reversal, we also find that there's another trend line connected right here. I have been drawing this for a while, but I already have exposure to the downside. I said that before and I kind of regretted it, but in terms of the market structure, definitely looks like there's more weakness within the price action. We do have a horizontal zone right around here, which it does look like it broke down below, which is definitely a little bit more bearish. And then let's just draw our projection zone right there. So we got a nice uptrend, turn consolidation to potential downtrend. And if it does actually start to really move to the downside, we have another ascending zone on the 4-hour. And if that does break, we could get a pretty high probability move back down to $1.50 here to retest that zone for another level of support. Potentially, right? So we can see not exactly there, $1.70, so it could be a little bit higher, kind of like here, but that major zone is going to be a key level of demand. So we can see it's a potential weakness right now. I kind of already have exposure to the market, to the downside, and I don't really need to add too much more. I'd like to see the market move more before I add on. Then I will have less risk because I would have moved my stop loss lower, thus freeing up more percentages against my portfolio to risk, to gain size without really increasing more risk, if that makes sense. Like if I put my Ethereum and BTC trade to break even, I now have 0 risk against my total portfolio, which means I can add to my short exposure while only risking, let's say, 1%, 2% of my portfolio, because my other trades are at 0 or they're already in profit, guaranteed. So these are the types of situations that you're wanting to find yourself in if you are adding to your position. In my opinion, if you're trying to add in size, it doesn't make sense to just add a shit ton at once. Scaling in does provide a little bit more flexibility and a little bit less, in my opinion, risk initially, where you have more confirmation because it's going in your intended direction, and then you can add more size, because in my opinion, that just makes the most sense. So that's the Link analysis. looks pretty good. Looks definitely looks like it's weakening. The daily definitely looks like it could be a really good opportunity for a short to come back down to at least the $2.50 range, probably maybe even to $1.70 if BTC does actually make its last leg down. But yeah, it looks like a good opportunity. It's pulling back here to a nice area of confluence around 325. I know some students are already in this short, or some community members, students, whatever you want to call them, but some Performante Premium individuals are already within this short, which is great to see. I think it is a pretty good opportunity here. Let's just go and say, let's say I want to look at this opportunity. How would I be looking at this? Let's take our short opportunity, zone of confluence, stop loss above the previous high, and first take profit would probably be maybe around $2.50 at this very low here. And those are some awesome risk reward parameters. We do see some minor levels, but I am expecting BTC to move to the downside, so I would be looking for a little bit longer of a move to the downside here as a reward. But my opinion, we are looking for weakness. We can see right here, we got a wick, we got a bearish engulfing candle, and then once you see that major bearish engulfing candle from the previous one, not really shown there, but this right here is a bearish engulfing candle, and then this is a nice wick to the upside. We also see a no demand right here, which is another setup that we talk about within the Performante Premium section. So a lot of indications just in that little move that shows us that there is weakness from the bulls and strength from the bears. So we're using VSA, we're using single candle patterns, and we're kind of using everything we have within our tool belt to try to understand the market. So if we do see weakness, would be probably a good opportunity. But in my personal, just in my personal trading, I'm already short on Bitcoin and I'm short on Ethereum. So, you know, if those move in profit and I'm able to reduce my risk on those, that's great. But at this point in time, I'm happy with the current level of risk I have with the market. All right, BNB is the next one. So starting from the daily, we can see major level of resistance and support at around 1650, right around there. But we got a lot of zones here that are actually pretty key zones. So that's around $16 is an important one for BNB. Also looking at $13 is important. And around $18 is very important as well. And then $9, $10, $9.5, let's say, is very important as well. So we got some clear zones we can identify within the chart, and we can obviously put a very, very well-respected ascending trend line there as a nice level of support. Now, BNB is actually higher than a lot of these alts. So let's look at the 4-hour, and a lot of these alts are already kind of down here. So if we're looking at Link, well below the highs, XRP well below the highs, Ethereum well below the highs. BNB, we're, you know, from the previous highs, we're basically at it, and we made a new high compared to basically every other alt that we talked about, which wasn't even able to create a new high. So BNB does look a little bit more bullish. The reasons, I don't exactly know, could be the more fundamental factors. BNB is growing. They just bought CoinMarketCap. They're making moves. A lot of positive things going for them, definitely, with the largest exchange. They're also incorporating futures contracts and trying to expand their exchange a lot more. And BNB is a great hold if you think that Binance is going to expand and grow and become a larger exchange in time, which, in my personal view, this is not financial advice, I do think that they will succeed. CZ is an absolute beast. Look at how many countries they're already in. They only recently started, really, in terms of the rest of the exchanges, and they're absolutely dominating many parts of the world here. And the only real country that can't really use Binance well is going to be the United States, because you need to use Binance US. But I absolutely love Binance. I love using the exchange, and I'm pretty bullish on the coin. But in that said, just looking at the price action, you got to be a little bit more bearish just due to the BTC and overall crypto market analysis that we have. So in that said, we do have a nice ascending zone. We could probably connect it a little bit more clear on the 4-hour, kind of like that. So this is basically like every other alt here. Let's just draw in our projection. And then let's just put in our nice little zones of support and resistance like so. That's going to be the major one. We can actually still see that it's still making nice and higher highs and higher lows. So BNB, in my opinion, looks a little bit better because it made that higher high. But at the end of the day, almost all of these coins are going to be correlated pretty aggressively. Like Ethereum and BTC is like 0.87 or almost 0.9 in correlation. So that's a pretty high positive correlation. And almost all these alts are more than 50% correlated positively. So they're going to move the same direction. So in my view, I'm going to have a little bit more of a bearish view on BNB. But yeah, not much more to say. I don't really see a structure that I'd want to trade on BNB until it breaks this ascending zone. Then I have something to work with, but until that happens, I don't really see a structure that I really want to be looking at for an entry, so I'm just not going to be entering. XRP looks better because we see lower highs. Ethereum looks better because we see lower highs. BNB, we're not really seeing lower highs. We're still seeing higher highs, so less optimal for a short in terms of market structure, but you know, if your bias is very short, you could just say that you're shorting from a higher point, which you could argue that that's a positive thing as well. Last thing we're going to be looking at is EOS. On the daily chart here, we can see, looking at the major zone that we're currently holding above, which is around $2 and let's say 47 cents. Pretty well respected throughout the chart. Next zone is going to be around $2.10, and the final area for our support is going to be around $1.70. So we got our nice structure right there. Let's go to the 4-hour time frame, and let's go and put in our trend line. Not perfect. I think I might do something like that. And then I might put another one just connecting the anchor point right there, the most noticeable anchor point, to not really giving me, I guess that's the zone that I would pick there. So previous support, new resistance, little squeeze. And then you still see these lower highs, which is a lot more bearish compared to BNB, where you're seeing higher highs. But at the end of the day, this structure is very similar to a lot of the other alts that we just talked about. You can even draw a trend line. Not as well respected because some of the trend lines are like this, but in this EOS trade, you see the trend line that is a little less descending, so we got quite a bit of room here. Whereas, for example, Ethereum is a lot closer to that zone. If we look on the 4-hour, it might, yeah, that helps quite a bit. Not precise, but definitely very similar to Ethereum, XRP, and Link. More so Ethereum and XRP, but very similar structure to a lot of these other alts that we've already discussed. So that's, excuse me, getting a little bit of coffee here. So that's going to be the crypto market update. We really hope you enjoyed it. We will be going over all questions that you have within the end of this video. So if you have them, drop them in either the YouTube or the TikTok, and we'll be answering every single one. So thank you very much for watching. If you're watching this on YouTube, if you found this educational, if you found this informative, if you found this entertaining, definitely subscribe, because you will be able to watch more of these types of videos. And it lets us know that you enjoy them and we should continue making these. So I hope you have a great day. I hope you are safe in the markets. I hope you're safe in the physical world, the reality, with your health and everything, with your family. And I wish you the best. So thank you for watching, and until next time, have a good one. All right, so that's the end of the crypto market update. And we can see Ethereum is coming back here a little bit. Obviously, I'm not too worried. We got a ton of space for the stop loss. No real worry. We got a massive amount of sell volume on the 1-hour chart for BTC, as well as on the 4-hour. We see very significant sell volume coming into the market, with obviously a lot more sell pressure coming in than buy pressure. So really, it's looking great for our short, in my personal opinion. I don't mind the consolidation at all. I'm very, very open to just waiting and keeping our bias, really. All right, so let's now go and answer all the questions on our YouTube, and TikTok. Let's just go to YouTube. All right. Benjamin says, excited to be here. Well, thank you very much for coming. We really appreciate you joining us in our crypto market update. Now on to our TikTok. Let's go. Hello from user. How's it going? All right. Can you take a look at SBPH for me, please? I need to see chart on an option would be cool. Like I said, I'm not going to be looking at single equity charts. SBP, I don't even know what it is. Spring Bank Pharmaceuticals. Yeah, I'm not going to be looking at single charts. I'm sorry, Mr. No Thumbs, but if it's indexes, if it's something that we're going to be looking at within our global macro, obviously that we'd be interested, but at this point, right now, not really going to be looking at random pharmaceutical stocks. Damn, I wish I was playing BTC Lol crypto in general. You probably can, depending on what broker you're using. A lot of brokers are offering cryptocurrency trading now. Some are offering crypto trading with no stop loss, which is a little bit sketchy. But yeah, check it out, whichever broker you are using. Shaky said, nice. All right. Okay, I'm back. Is this SBPH? Nope. Yeah, so I'm not, if I do one analysis on one random equity that I don't care about and someone just told me, there's going to be a bunch of people who say, can you look at this? Can you look at that? And yeah, that would just take too much time, obviously, for me to go over every single chart that everyone recommends. So I'm just doing the stuff that pertains to the crypto market update. And then for the global macro, we'll be going over all the stuff with the global macro. It's not a Q&A for everyone, and unfortunately, it's kind of pertaining to the subject that we're talking about to some degree. All right. Okay, so we got no more other questions. So thank you very much for watching our crypto market update. We will be doing a global macro going over gold and silver ratio. We'll be going over the S&P 500, long-term, short-term, and then the US dollar index as well. So definitely keep an eye out for that. We will be posting our crypto market update first. Yeah, so hopefully you didn't miss it. So Mr. No Thumbs, I'm going to say this, hopefully you are listening. We're not going to be going over single stock charts. So if we're not like trading it, if it's not crypto, we're not going to go over it, because if I allow myself to go over one chart, a bunch of people are going to be asking, can you go over ATT, can you go over BAT, can you go over a bunch of different tickers for stocks? And in my personal view, that's not my job. My job is to try to provide great opportunities for the stuff that I'm looking at. And yeah, I can deviate somewhat, but I'm never going to trade SBPH, to be completely honest. I have no desire to even look at it. So unfortunately, this isn't the live for, unlimited tickers, and I'll analyze every single one. It's more pertaining to the topic at hand. So I'm sorry to hear. I'm sorry I can't do that for you for every single person, but hopefully it can still provide you some value for the foreseeable future. So thank you very much for understanding. And we'll be going over the global macro update shortly. So thank you very much for watching, everyone. And until next time, have a good one.